heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York. Ed Ludlow, he's off today. This is Bloomberg Technology. Coming up, Apple and Google in talks to use Google's Gemini AI in iPhones. We'll break down the potential blockbuster agreement that could shake up the AI industry. Plus, the Woodstock Festival of AI, Nvidia's annual conference, kicks off today with the company facing sky-high expectations for investors. We'll have full coverage ahead. And Elon Musk's full interview with Don Lemon is out this morning after the billionaire cancelled a planned partnership with the CNN veteran. We'll bring you the takeaways, what this means for X, and why Elon Musk says his ketamine prescription is in investors' best interests. It's the most important story of the day when it comes to the stock moves, the future of AI, ahead of course, what we see from Nvidia a little bit later. Alphabet shares soaring 6.8%. Why? Because we understand that there are indeed some conversations into the works that Gemini will be the AI of choice when it comes to generative AI for Apple. Of course, 2 billion phones. What does that mean? More broadly, we have 2.6% higher for Apple. Now, notably, though, what does it mean for Apple on its own generative AI story? And why not Microsoft and OpenAI? So much to discuss with Bloomberg's Mark Gurman, who brought us the scoop. Of course he did, Mark. Amazing bit of reporting. Now, first, what does this mean from your perspective for Apple? Because where are we in its own generative AI story?
Yeah, Caroline, thank you so much for having me. This is a sizable moment for the AI industry, a big moment for relations between Apple and Google, and of course, a big moment for Apple. Apple really has no choice but to get on the artificial intelligence, ChatGPT, generative AI bandwagon. They were caught flat-footed when all of those new software and AI initiatives started rolling out about a year and a half, 2 years ago. And so Apple has a homegrown artificial intelligence model of its own. You're going to see Apple release several new AI features this year. But most of those features are focused on day-to-day productivity, proactive intelligence, doing things in the background. They're not focused on what we think of as AI today, which is essay creation, image generation, typing things into a Gemini or ChatGPT or Copilot like chatbot. And so to fill that gap, Apple is seeking an outside partner, and they've talked to two companies primarily, maybe a third, but the two they've talked to primarily are OpenAI, of course, and Google. And OpenAI and Apple held talks recently, but active talks are currently underway between Apple and Google about licensing Gemini to be used in iOS 18 in the iPhone for generative AI use cases beginning later this year.
Okay, that's an interesting take, isn't it, more broadly about the Microsoft relationship, OpenAI, many wondering whether how much of a done deal this is. Go back to Alphabet and what this means, not only for Gemini, which of course has had some hits from a PR perspective, if not much more, but also what it means for its own chips that they make. I mean, some people reading across that this isn't therefore just completely Nvidia and AMD's game here.
Yeah, certainly this is a big moment for Gemini and Google as well. Depending on how this thing is branded, it can turn Gemini into more of a household name. From what I'm told, talks, they're not early, they're not advanced. They're sort of somewhere in the middle. So this is not a done deal by any stretch of the imagination. The companies have some time here before Apple needs to make its artificial intelligence announcement. Commercial terms haven't been worked out yet, nor has branding been worked out yet. But this definitely would take Gemini and put it, like you said, on billions of more devices, depending on where Apple does these AI integrations. And if they slap the Gemini name on it, obviously this would be very big for Google, but it's unclear yet if they will do that. It's also unclear if Gemini would be the default or one of multiple large language model options for chatbots and other things within Siri, in addition to Apple's homegrown AI tools.
And not to mention what that means from an antitrust perspective of Alphabet and Apple's relationship has been raked through the coals of late. Mark Gurman, wonderful reporting. Thank you so much for bringing us the breakdown of the overall story that has really infused enthusiasm into the stocks today. Let's get more take for you. Brent Thill, he's Jefferies equity research analyst. And let's start on what this means for Alphabet and indeed whether this deal can really get done from an antitrust perspective. What do you think, Brent?
Well, I think it can get done, and Google needs it. I mean, right now, Google's had a really difficult run. It's been an investor story that most investors right now are disappointed with the leadership and obviously the AI launches that they've come out with. And so I'd say in terms of the most negative sentiment in any stock I cover right now is on Google. So they need a good win like this, and they need Gemini to be put on the front burner. And this would be obviously a huge opportunity for them. Whether it happens or not, who knows at this point. But yeah, this is a great opportunity for Google. I just say that right now all the attention has really been on Microsoft with the OpenAI relationship, and so obviously you're starting to see different alignments in different AI technologies, right? Microsoft and OpenAI, obviously Apple, Amazon's now aligning with others in the industry. So you're seeing kind of clear alignment in the industry around different AI leaders. And we think that, again, this would make sense given what's happened with the search relationship to extend Gemini out to the platform. And again, I think the opportunity is great for consumers, which today a lot of these AI agents are kind of difficult to navigate. They're kind of wonky, right? So could Apple and Google seamlessly integrate this into the products? Where I can literally open up my Apple laptop and say, what are my top appointments for today? Yeah. And the agent can read off what's happening. Today, that doesn't really exist. So there's a lot of integration that can make this really easy for end users, and the adoption even take off further for Google.
But Brent, what does it mean more broadly, therefore, on an ability for Alphabet to maintain its market share here? Many have worried that OpenAI, for example, would start to steal away some of the search penetration that it has, but it hasn't so far. It feels like. What do you think about the future?
It's early.
Yeah.
It's very early, and I think why this is so important is, to your point, that everyone's so worried that we're all going to have all these little agents running around. We're going to ask questions. What's the weather like in San Francisco? How's traffic in XYZ from point A to point B? Right? We're going to have these agents doing this. And I think this, again, is why it's so badly needed, that if you can put it on one of the top platforms, that this effectively, they would capture those search shares through Gemini, right? So the AI agents need the data, and they need the users, and they need the back end information. And so if effectively this can front end, then, again, versus other chatbots that they could partner with or any other AI agents, this is, again, going to be a huge removal of that overhang if that happens. Now, today, I think that, again, many of the AI agents can't really solve real world problems, right? And they're starting to show that they're getting better. And so, yeah, there's the fear. I certainly think that this would help, but that fear is not going to go away for Google. Many of these systems, for example, in ChatGPT, I was in the Atlanta airport last week. I had meetings all day. I didn't know where Chick-fil-A was. You can ask, it's in Terminal A, right? The agents are getting smarter. I don't think it would have probably known that, 6 months ago. But these agents are getting smarter. So that is going to be an ongoing concern for Google. The bigger issue for Google right now is really no CFO. Who's going to be the CFO? Are they going to be shareholder friendly? And to your point, search share and then AI relevance are all weighing on investors' minds right now.
Okay, so still worried about Ruth Porat's replacement as she moves to a different part of the business more broadly, Brent. But go back to Microsoft, which you also have a buy rating on, I believe, at the moment, and how much this means for the traction of OpenAI, partnership with Microsoft, and what Bing represents as a challenger, and more broadly its world of AI. Are you worried that the fact that it hasn't automatically pushed out Alphabet here?
I'm not worried. I think, again, it would make sense that Apple and Google would line over an Apple-Microsoft alignment. So never rule it out, but certainly I think that alignment with Google makes a lot of sense. Again, I think the thing is that you're going to have multiple vendors that win. There won't be a lot of winners in AI among large caps. There are only going to be a few, right? In the Amazon, Microsoft, and Google. But they're all going to have an alignment, and this doesn't concern me for Microsoft relationship. If you think about where Microsoft's thriving is in large enterprise, they've gotten just incredible adoption in everywhere we turn. they're getting adopted left and right from even big Amazon shops. So it doesn't concern me. I think you're going to see, again, as I said, formation around different AI platforms from all the big tech leaders, and that formation has started. So I would think that the Apple-Google relationship would make more sense. But never rule out Microsoft. But again, it's not a thesis crusher for Microsoft, given their presence in a lot of the big insurance, healthcare, government. They're doing just fine. There's plenty of contracts for them to go after outside this one.
This is a show me moment for Alphabet. Brent Thill, it's so good to catch up with you. Thank you this Monday morning of Jefferies. Meanwhile, look, if you wanted to trade either of those stocks, you might have had a bit of a problem in earlier market hours, that was at least. The NASDAQ Stock Market Exchange now saying it has resolved that technology glitch that disrupted pre-market trading in almost, 3 hours of time. Now, the NASDAQ spokesperson that we spoke with, they said that the issue did start shortly after 4 a.m., but it was resolved around 7 a.m., and the disruption was the second at NASDAQ in about 3 months. But it must be said, these sorts of issues from the NASDAQ are very few and far between. You can see the impact of basically nothing going through the markets, pre-market trading up until 7 a.m. Now, coming up, we'll turn to Nvidia. What can we expect from the first day of the semiconductor company's annual artificial intelligence conference? It's called the Woodstock of AI. We'll tell you why. Meanwhile, look, maybe not many people are buying these AR, VR bits of hardware as have been expected. And Sony, we understand, still up 2.2% on the day, but it's hit pause on its PlayStation VR 2 production. Basically, it's got too much inventory. It needs to get rid of it before it pumps out any more of these $550 wearable accessories. From New York, this is Bloomberg Technology. All eyes on Nvidia today. The semiconductor makers GTC, it's an overall technology conference, of course. It's kicking off in San Jose today. Get this, some 10,000 people are going to be watching live. We understand last time it was 22 million watched virtually. Those expectations are high for an amount of people tuning in. But what it means for this stock rally that you can see 243% higher over the course of a year. Let's bring in Bloomberg Intelligence analyst Kunjan Savani for more on what to expect. It's 4 p.m. Eastern, where I sit, 1 p.m. your time over on the West Coast. What will we hear from Jensen, do you think?
Well, we expect a few significant announcements that should sort of recharge the already strong rally. First is the announcement of the new B100 chip, which we believe will be the first 2-chip in a package product. And why it's important is it should have a performance upgrade over H100s of at least 2x, but we believe more sort of 2.5x. Second would be sort of an upside on the TAM. Last GTC, the TAM was about $1 trillion, with $300 billion being the size for the market of the chips and hardware. We think since then the estimates have kept on rising, and they are likely to announce a higher number on the chips and the hardware section. And finally, what we think would be an ideal update would be a lot more clarity and visibility on their software business execution. More importantly, the monetization and the revenue run rate over there.
Okay, so you want a lot of transparency on pricing, on speed, on addressable market. I'm interested on the pricing side of things just quickly, because when we are seeing such iterations, when we are seeing such ability and power being brought to the market, as in what you insinuate with the B100, are they going to be able to charge a whole load more for it?
They should be able to. I mean, look, 2x performance over the last generation is significant, and it should help them widen their technology performance gap even higher. So they should be able to charge a lot more pricing with that.
Briefly, the risk for you, Kunjan, is it that we don't get enough of these numbers? Is it that people's expectations are too high going in?
Yeah, it's mainly the headline risk. I think in the intermediary period, while the B100 starts ramping, we are hearing that customers might think about, should I adopt, let's say, an H200 right now or wait for a B100. So what that might mean is sort of a lower magnitude of beat and raises in the intermediary. Also, the other thing to remember is when B100 launches, it will be a new supply chain stack. So it could be, again, supply constraint, limiting NVIDIA's ability to, again, deliver higher beats and raises.
very importantly put. Bloomberg Intelligence analyst Kunjan Sabani, thank you so much. And look, let's talk about some of those risks and opportunities a little bit more now when bringing in Advisors Capital Management Partner and Portfolio Manager Joanne Feeney. And I feel as though this is something you've mentioned time and time again. The supply side is the issue here, not the demand side. And what are you worried perhaps with a B100 and a supply chain that has to be reamped even more there?
Yeah, it's certainly going to be a complicated process, but NVIDIA has been there before. The challenge now is really on the packaging side, and it's been a constraint for a while for them to get more chips out the door. Now, they're going to have more to work with. They're going to have the old, H100, the H200 coming out this year, and then the B100. So I suspect that different sorts of customers will get the different sorts of chips, and that'll help ease their supply constraints. But that new one that's going to ramp towards the end of the year, it's really going to be a 2025 story in terms of real numbers. And by then, we should see the increase in packaging that's being made available now by TSMC, by some of the specialty packaging companies, and even by Intel, with whom NVIDIA is going to work for some of their advanced packaging needs.
This is what's so interesting about the space, is it's one big frenemy club, as far as I can work out. Intel and Nvidia sort of against each other, but so dependent on one another. And when we then think about the demand side as well, there's frenemies there too. The story that Apple may be looking to Alphabet for its generative AI applications, then the read across for some analysts is, well, Alphabet starting to make its own chips. How much of a concern is competition for Nvidia at this stage?
Well, I think it's a little bit early, but what they say this week, and particularly what Jensen says later today, I think is going to help frame people's expectations on the competition front. And there's really two areas. One, the training side, which requires the absolute best possible accelerator chips made by NVIDIA. And then there's the inference side, which is less computationally intensive. It's just where you ask the question and it gets answered. That computation isn't as demanding. And that's where we're seeing more competition. And clearly, Google has its own chips that they make in coordination with Broadcom, which is one of the reasons why we continue to like Broadcom as a stock pick here. And then you also have a bunch of startups that are starting to get into this space, whether they're private companies or older ASICs sorts of companies. So there's definitely going to be a lot of competition. They're attracted by those high prices and high margins, but it's no easy trick to build a very highly computationally capable chip like the ones NVIDIA has worked on for decades.
Let's just dig into the software side as well. And you've talked about CUDA in particular over with NVIDIA. We were hearing from Kunjan saying, where is the ongoing growth, and particularly from a revenue perspective of software? Where are you seeing growth for NVIDIA there?
Yeah, I think that the software side, as we've been learning, is going to become increasingly important. I mean, the chips don't work in isolation, and the CUDA software platform that NVIDIA has had out there for many years works tightly with their chips, and it makes it easier to run these models and to basically build the code. The code is now trained on, many software programmers have grown up learning CUDA. And so they have a huge advantage in the coordination between the hardware and the software side. And we do expect the software side to become a bigger driver of revenues as they're really closely tied together. And that's why we do think there's a little bit of room for a bit more margin over at NVIDIA. It's one of the reasons that earnings have outpaced revenue growth over the last 4 or 5 years, and we do think it'll be able to push it a little bit harder for the next couple of years.
I love how you dissect what basically the room of developers are going to want to be hearing, and then the room of investors on the back of what developers are hearing are going to be wanting to be listening into. Margin. I mean, tell us a little bit about where NVIDIA sits in your portfolio, whether you add to it these levels, whether you want to be going more broadly.
Yeah, so we've held NVIDIA for a while now. We've always liked the AI story. The role of NVIDIA in portfolios really depends on the client. Right? This is clearly a growth company. It's going to be potentially more volatile than some other companies out there in terms of its stock. So it's not suitable for everybody. But we do see it as a core holding in our growth strategy. We do see the opportunity for it to continue to grow. We see 80% revenue growth this year, but that's really built on the fact that they hit $22 billion in revenues last quarter. Yeah. So you just run that forward, add a little bit of sequential growth, and you get to over 100 billion, 110 billion in revenue. So you get 80% growth. But going forward, right, people have to recognize that we're going to see more like 20% growth, 25% growth.
And at the moment, still trading on forward PE valuation of 35 times, but market cap just 2.5 trillion. Extraordinary, the run we've seen. Joanne Feeney of Advisors Capital Management, we thank you so much. Time now for Talking Tech. First up, Intel-backed semiconductor connectivity company, that's Astera Labs. Let's raise the size of its planned IPO by, get this, 26% as the investor frenzy around AI continues to rage. Now, according to an updated registration statement that was filed with the SEC, the company and its investors now plan to sell 19.8 million shares at $32 to $34 each. That means the offering would raise as much as $673.2 million. Plus, Alibaba has appointed a new head of its grocery arm, that's Freshippo, in the latest step for a broad restructuring effort. Now, the CFO is going to replace the company's founder as CEO of Freshippo. They will retire but serve as a senior advisor to the company. That's a former founder, of course. All of this according to sources. And the EU is considering a formal review of how widely businesses use mature or lower-end chips from China. Look, they're joining the United States in flagging a potential risk to national security and, of course, global supply chains. Now, according to a draft working statement, the EU is weighing whether to investigate how deeply such semiconductors are indeed embedded across industry networks. Now, coming up, we've got to get back to that crypto rise and slight pullback of late. Dig into the markets with August co-founder Aya Kantorovich. Next up, let's look at what we're watching in terms of those publicly traded companies. Cloudflare, interesting sort of revolving door here. We've seen Stephanie Cohen. That name will ring a bell because she, of course, was the leader behind Marcus, the retail offering coming from Goldman Sachs. Now she's the latest executive to step down from that particular bank. Where's she gone? Cloudflare. Chief Strategy Officer for Stephanie Cohen. From New York, this is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Let's get you checking on these markets. And after a slight technology outage of its own over at the NASDAQ, we're back on track and we're actually seeing the NASDAQ 100 up 1.5%. So after that pre-market issue from a technical perspective that stopped some trading, we're now up 1.5%. And it seems to be AI that's leading the charge. The hopes, of course, within certain, the Woodstock of AI a little bit later. Stock 600, though, over in Europe, just finished trading and actually down some 0.2%. So this sort of euphoria from AI not being built in to what's happening globally in the stock market today. And remember, this is a big week for the macro picture, particularly from central banks. Bank of England, Bank of Japan is coming tomorrow. And of course, the Fed on Wednesday. We're looking at Bitcoin just lower versus the US dollar. And in fact, US dollar has been higher against most of its G10 currency pairs. We're off by another 2%. Let's call it 66,974. We're going to dig into that in a moment. Move on, though, and have a look at some of the individual companies that we're looking at. And I mean, this is the story of the day. Coming from a scoop from our own Mark Gurman, we're seeing Alphabet shares powering up almost 7%. Why? Because it looks as though Apple are already in talks with them to be using Gemini, the generative AI part, an offering from Alphabet within the iPhones and iPhone ecosystem, but Apple more broadly. What does that mean for adoption? What does that mean for its penetration and holding its overall market share when it comes to search? I'm looking also at what's happening with Cisco, 1.23% higher. Why? Because finally the deal is done with Splunk. And actually you want to stick with that very news because the CEO, Chuck Robbins, and the former now Splunk CEO, Gary Steele, joined Bloomberg earlier today, ready to discuss how the Splunk iteration fitting in within Cisco's product and financial strategy is going to continue. Take a listen.
There's an emerging area called observability, which is effectively trying to help our customers understand application performance, what's going on in their technology infrastructure, particularly in this world where you have hybrid cloud, multi-cloud, private cloud, SaaS, and so that's one big area. And then the other big area is cybersecurity. If you think about the utilization of AI by the bad actors, we're going to have to do a better job of doing real-time analytics and real-time detection and response. And in my view, we have to be able to take 3 or 4 different things that we're seeing happening at the same time. And those 3 or 4 independently might not indicate a problem, but together there's a problem. And their data platform with our detection and response capabilities and all of our endpoints and all of the sources of threat intelligence that we have and our massive amount of intel that we see on a daily basis, we think brings our customers the ability to actually do that in real time.
And of course, when you talk to the sell side, there's also this narrative out there that you're trying to remake Cisco as a provider of networking services, and really trying to lessen your reliance on one-time sales of equipment. How do you see this deal as really pushing that effort forward?
Well, that's an accurate narrative. So we we have been moving into more software. So I think the three metrics I would share is that last quarter we hit a milestone that we had set to try to get to 50% of our revenue coming from recurring revenue, and we did that last quarter, which is a big move from 8 years ago. The other thing is combined, Gary and the team bring $4.2 billion of ARR growing in mid-teens.
15% as close to the end of the year.
And combined, we have ARR now of almost $29 billion. And we're over $20 billion from just software sales in the company now, which is when we add Splunk software sales to it. So I think we've made a lot of progress, and we're going to continue marching down that path.
Well, as this integration goes forward, of course, both of your companies have announced layoffs in the recent months. As you integrate these two, would you expect there to be further headcount reductions?
This deal was not predicated on cost synergies at all. It was built on revenue synergies, and it was built on the integration that we talked about and the new capabilities that we can bring to our customers. So that was never part of our plan as we were putting the integration plan together.
And of course, you had mentioned, Chuck, that when it comes to AI, there's concern and uptick in that being harnessed by bad actors. And Gary, I'm curious what you're seeing in your data when it comes to these AI cybersecurity attacks.
You're just seeing more sophisticated attacks, whether they're specifically targeted attacks, phishing attacks. We're just seeing more sophistication. And it's a new set of tools that bad actors can drive more and more sophisticated attacks. And we feel very good about coming together and the work that we can do collectively, driving great outcomes through the use of AI to ensure that our enterprise customers are well protected.
Yeah, if I could add real quickly, we have an organization called Talos that sees about 20 billion threats a day. And so one of the things that we believe we can do is take all of that intelligence and inject it into the data platform that they provide customers and give them a whole new level of real-time visibility that they've never had before. So it's pretty exciting.
Future of AI, future of their relationship. CEO Chuck Robbins there, Cisco, of course, and the former Splunk CEO, now part of the business, Gary Steele. Now, let's pivot away for a moment and talk all things crypto, because we've just got to talk the numbers involved. Investors adding, get this, $8.12 billion to crypto-focused exchange-traded products during the past month alone. 15.5 billion, in fact, has been added to these ETFs in the past year, all according to data compiled by Bloomberg. Let's get up to speed with why, therefore, some of the why crypto has pulled back in terms of a price point. Let's ask August co-founder and co-CEO, Aya Kantorovich, for more. And look, the hype has been real, but the flows have been real, and now we pull back. Any reason why, Aya?
Absolutely. So we did see, as you mentioned, a height of $72,000 reached last week. And so we did finally clear the 69,000 level. And what we are hearing is a rumor that led to the BTC crash going into the weekend. And so we went from 72,000 down to 65.5. And the rumor is that there was a fund blowing out roughly $1 billion of the MicroStrategy BTC spread trade. And so this hedge fund set up a spread trade that shortly before the ETF approval, considering that they were long BTC, they were short MicroStrategy, and the idea behind it was that MicroStrategy was going to fall once the ETF was approved and BTC is going to rise. However, as you'll see in the market, that MicroStrategy actually outperformed Bitcoin, and so it necessitated them unwinding the trade and closing the position. Into the weekend, you saw BTC dump, as well as MicroStrategy premium go high, and a mini rally there. So a lot of market activity, and that's really the rumor going into why.
Okay, some rumors that we will check in on, make sure that we'll look around as to who this fund is, and a MicroStrategy price currently at 1641, so down a little bit from its heights of the previous week. When we move away from rumors and look at fact at the moment, though, Aya, what's factual is that Bitcoin has done well, but actually so has the entire ecosystem. And you've not just seen ETH do well, and there's a rumor perhaps around the future ETF, spot ETF for ETH in the US too. But just broadly, like meme coins going well, but so are some really, well-loved protocols such as Solana. Are all boats going to keep rising?
I think right now what you're seeing, especially with Solana, is with regards to the meme coin trend. And I want to anchor on this because we're really seeing Solana look like Ethereum in the 2017 ICO bubble. You're seeing meme coins come out with pre-sales that look very much like ICO pre-sales. You're seeing that the Solana ecosystem has so much activity. Sol ETH ratio is at an all-time high right now. And Solana has also overtaken Ethereum on Google Trends. You're also seeing a lot of this activity happen outside of the US. So for example, Robinhood Europe listed a couple of meme coins as well on their platform. And so, to your point, rising tide lifts all boats, but there certainly are boats that are rising much faster than others. And especially with the correction that happened into the weekend, Solana was very much unfazed by that. And so it's very interesting to watch as well. And to your point, a lot of eyes on Ethereum going into a potential ETF approval.
The meme coin craze, how much is that actually being jumped upon by institutional investors, by crypto OGs who understand that perhaps the fundamentals aren't a basis of this, but this is a value creation like we haven't seen before?
It's going to be very much retail driven. And, the way I think about it is very much a sense of community and engagement. And we saw a lot of this happen with Reddit and the Reddit community when you had GameStop on Robinhood, you had your Robinhood traders. And again, you're seeing just absolute insane engagement on Reddit, which is going to be very interesting for them going into their IPO. And also engagement on Twitter around just people building communities. So you saw, David Sachs, for example, launch his own meme coin. You saw something called the Book of Meme, which has performed tremendously. Obviously, Elon Musk is continuing to push Dogecoin, and you saw Dog with Hat as well. These are all just very large communities of folks who are engaging and can find a way to engage in the markets on Solana today primarily, which is where they're being pushed. But it is very, very much retail driven. I would say there's very few institutions who see perhaps the value accrual here long term, as opposed to just trading in and out of these tokens as well.
This is just an extremely online community wanting to show that love. But what therefore of more broadly going back to where institutional money is, Bitcoin, ETH, some of the more old-standing protocols, are we seeing leverage back? That would seem to be something that we were being flagged at the end of last week, that maybe the pullback is because leverage has got too heady again.
Yeah, we are seeing leverage back, but what is really nice is that we saw the funding reset into the weekend. And so funding went from roughly 80% to 20%, which leaves us in a really healthy spot right now for us to move forward. Obviously, to your point, as you mentioned, when the funding does go out of hand, we tend to see pretty volatile moves. And I will just really emphasize that liquidity on exchanges is very, very thin. This is some of the thinnest liquidity that we've seen, as you are seeing people hodl or hold their Bitcoin. And so you're seeing very big price moves and market moves because of that thin liquidity. And at large, the technology is building. I mean, I will say, outside of the meme coins, Ethereum did have an upgrade last week, which meant that transaction costs on layer 2 rollups built on Ethereum are now lower. So you're getting a lot of updates, a lot of really interesting technology that's being pushed over the last few weeks that is very focused on the institutional volume coming in across the top 10 majors. And so we're excited to keep an eye on that.
Well, thanks for keeping our eyes on it. We thank you, August co-founder and co-CEO, Kantorovich. Stay well. Meanwhile, coming up, we're going to have more of the focus in other parts of the technology ecosystem, startups in particular. Index Ventures is out with a new book for rapidly scaling companies. More on that next with Index Ventures partner, Martin Mignot. Meanwhile, let's have a quick look at some of the publicly traded companies for a moment. FedEx, Amazon. They're only up about 0.3%. Look, FedEx has its earnings coming out later this week, but an interesting report coming from the Wall Street Journal that FedEx and Amazon are indeed discussing a partnership as, of course, the competition perhaps is returning for package and overall deliveries. We knew that the two companies last year discussed, apparently, FedEx accepting returns of Amazon packages at its retail locations. From New York, this is Bloomberg Technology. Today, Index Index Ventures, well, it's launching a new book and an app, of course, for its own founders. The book is called Scaling Through Chaos, the Founder's Guide to Navigating a New Era of Innovation. It explores the challenges of designing a rapidly scaling organization, investing in leadership, and so much more. Joining us to break it all down, Index Ventures partner, Martin Mignot. And it's great to have you here. You, of course, moved from Europe to New York. You've been setting up more of a hub here. And I'm interested as to why founders need a blueprint, because almost the whole idea of startups is that they're unprecedented, never seen before, totally new.
Yeah, so maybe taking a step back. So Index Ventures is launching a new set of resources, as you mentioned, for founders to help them scale from 0 to 1,000 employees. And we call it Scaling Through Chaos, precisely to reflect the nature of the beast. That is, it is challenging and there's a lot of uncertainty. This is the most in-depth research on the topic. We analyzed more than 200 of the fastest growing companies of the past decade, companies like Uber, Airbnb, Adyen, Datadog. And we also interviewed more than 60 founders and top operators from these companies to kind of bring the data to life. And the result is the book, the blueprint that you mentioned, 300 pages, an absolute page turner, I can guarantee, and a companion app called Team Plan, which is all available for free to everyone on scalingthroughchaos.com.
And look, but having a business of any sort is chaotic, at least. And then you throw in sort of huge valuations, purchases, not purchases. I think of Figma, of course, is one of your companies that you backed in an extraordinary journey that Dylan's been on, and having to now continue to build no matter what, even when you think you've got a massive deal on the table. What were some of the most surprising things you heard from the founders?
Yeah, well, there are a lot. It's a lot of pages, a lot of findings. But the three that really resonated with us, I would say the first one is the time spent on people-related matters. It sounds obvious, but we quantified it in the book. And what's interesting is that across stages, so from 0 to 1,000 employees, it stays relatively constant at about 50% of the time of founders. And it's quite surprising for founders very often who think that the people-related matters is a bit of a tax on their time. Well, it's not. It's the main thing. The nature of the time you spend is a bit different. In the early days, it's mostly about hiring and onboarding employees. Later on, it's more aligning people and running the team. But that amount is pretty constant. The second finding that we thought was really telling was the importance of emphasizing performance over loyalty. One of the findings of the book is that by size 50, only 5 of the first 10 employees are still with the business.
Oh, wow.
And when the company reaches 1,000 employees, only 2 or 3. Which means it's not a failure, it is a nature of the beast. It is, this is a natural life cycle of a startup. It's very important for founders to realize that and almost embrace it, realize that it is part of the journey. And the third one is embracing chaos more generally. These companies on average are growing more than 2x year on year for 4 to 5 years. So at any given time during those first 5 foundational years, more than half of the team will be new to the business. So there is an inherent level of chaos and uncertainty that will happen, and you can't tame it entirely. And so you have to learn to live with it, grow with it, and bring processes progressively. And that's what this book and the app is hopefully will be helping founders to do.
And look, maybe use the chaos to your advantage. And what's interesting is it's called Navigating a New Era in Innovation. And boy, do we keep going on about the new era of AI. And I'm interested at how much that changes the game. When I think of HR, when I think of hiring, I suddenly think, well, is AI going to upend that amount of people that you're having to increase, or the types of people that you're adding to? How are you trying to foresee the new types of chaos companies are going to see?
Yeah, we may update later on our research for the new type of AI companies, but the way we think about innovation is that it happens through waves. And a wave doesn't replace a previous wave, it builds on top of it. So AI, for example, is built on top of cloud and mobile. And so that's why the pace of innovation seems and is actually happening faster, because you're leveraging what happened before. But the reality of building a business, I don't think will change. I think the time spent on people will remain at 50% across the entire life cycle in this first 1,000 employees journey of a company. And the type of people to hire and how you retain them and how you motivate them and how you lead them, AI is not going to change that. Actually, I think if anything, this is going to make it even more important.
Well, you're going to be talking about this much more at an event that you're hosting a little bit later. Index Ventures partner, Martin Mignot, we thank you so much. It's out. The full interview. Elon Musk and Don Lemon's hour-long interview has been released, and it's just days after we understood that, of course, the billionaire Elon Musk actually cancelled the CNN's alum's partnership with X. In it, well, the interview kind of discussed a wide range of topics. Musk's commitment to free speech, for example. Take a listen.
I'm here, as you know, I'm on the platform because you say you're a free speech absolutist, right? And there are no conditions.
Yeah. Free speech is as much as possible within the bounds of the law.
Yeah. So the reason I'm saying that is because there are no conditions on this interview. You said that, we'll speak to you for an hour. I don't like sound bites, so I welcome that. So let's get into it.
I'm on the platform, but then not on the platform. And actually, it was very hard to watch the interview on the platform for the first hour or so. Let's bring in Bloomberg's Kurt Wagner, who has watched part of it. And I mean, from the get-go, it was an awkward conversation. The key takeaway for some, and certainly investors in Elon's publicly traded companies, are, well, the way in which he's sort of vindicating his use of ketamine, for example.
Yeah, that was a very tense exchange, I thought. They talked about, Elon talked about his prescription for ketamine. He, of course, said he doesn't abuse it. He uses it because of, a doctor's advice, and that he sort of suffers at times from depression or sadness. And so he also kind of pushed back very, very briefly. He was like, asking someone about a personal prescription is a pretty private thing to ask. And he kind of, pushed back on Don Lemon's question there. But it was just very interesting to see him sort of challenged on this reported drug use, right? And Don Lemon asked, is this going to impact your contracts with the U.S. government? Does this impact your decision-making, your tweeting? And so that, as you can imagine, was a rather tense exchange pretty early on in the conversation, which sort of sets the stage for a tougher conversation. I mean,
Don Lemon went on to give his own views on why his show has been cancelled on the platform, him saying that Musk disliked his line of questioning. Meanwhile, Elon Musk himself is saying, look, basically, this isn't what we envisaged. It's just CNN, but on social media. So reading between the lines, what does this mean for X's push to being a video-first platform, to getting these sorts of top talent to come on and give them content?
Well, I would say Don Lemon was probably the headline of this entire push. We saw at CES in January, they came out and announced, a small handful of new shows and how they were, as you said, kind of pivoting to video, making that a priority. But when their, top or perhaps most well-known partnership falls apart before it ever really gets going, and when Don Lemon is out there saying the reason it fell apart is because I can't actually ask hard questions of the sources that I want to ask, it definitely does not bode well for, one, the push to video in general, but also Elon's stance on free speech.
Kurt Wagner, we thank you for bringing us the latest on all things X. Meanwhile, that does it for this edition of Bloomberg Technology, wherever you consume it.